Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, May 12th, 2024. It's about quarter to 1 p.m. here on the East Coast. I'm Wayne. We're going to get into it. This will be, I hope, one of the least painful sector situations anyone's ever had to sit through. Here's our trusty disclaimer. Here is our trusty intellectual property rights notice. And then I'm going to leave up the macro measure notes for everyone, just in case you didn't catch that. Wait a minute, that skipped over. Oh, there it is. Yeah, it skipped over. Somehow that got skipped over. Anyway, we're leaving the weak control up there because that's really what I felt like we may be having a little bit of. Like bulls took control kind of as anticipated, I think, last week after the Powell pivot, but they did move things up. So I won't say that. And most sectors also moved up. So overall, they did, but it's kind of a weak finish for me. I don't know what it was. It just kind of caught me as like, wow, this is not what I thought. I thought there'd be at least maybe not a crazy great finish, but just a solid finish. And felt like the way they moved things up and then just backed off was a little, I don't know, a little lacking. Anyway, enough of that. Let's get into a little bit brief pause here while I switch things around and get us where we're looking at our sector charts. And I think I'm just going to start out with my basic screen and talk about SMH first, since we go through the sectors, and this is a sector ETF. This is the semis ETF, and this is really the important one for me because it's of its lead sled dog status. And you might say, why are you calling it that? It's not even doing that right now. And there's some truth to that. I'm just saying overall, it's just been, right, we know how important semis are to everything at this point, and the semi mania with respect to AI, the AI mania, the electricity play based off of that, all the stuff, right, that's going on. So these look pretty good overall, right? I think that this has had a really almost a textbook type correction. I talked about that in macro measure. Again, tried to break out and really go, but this line that I just highlighted was a resistance line that I worked with for a little while, and they did get through there, and then they went ahead and did the old back and fill, right? They kind of came back, touched it several sessions in a row, or came very close to it, and then started moving things up on Friday. And I thought, right after the kind of initial pop through on Monday, coming back to the 50 and the line, really very close to it on Tuesday, certainly on Wednesday and Thursday, that they would then take this and finish a little more strongly. I was looking at maybe finishing 1% higher, or maybe even a little bit more, maybe like 1.5% higher, because after all, this is a leader, but it really didn't. Now, they did put together the best close they've seen in a while, so that's good. It's just that what happened, right? Was it just really a one-day thing where there were more people saying, hey, it's been a great bounce since Powell, let me close this week out and start fresh? Could be a lot of things like that. Could have been gamma. It's hard to say, right? Even if I had all that data, it would be hard to say, well, this is the reason why. This is exactly why. It's hard. It's a combination of things more than likely, but it just was what it was. And you would think, and the reason I didn't really get to talk about on Cocktail Hour with Mark and Ryan, Greg, and Bill was really because this VIX reading is really low. I mean, you've got to go back till we looked at it, other than the recent time right here, and then right here, you've got to go back many years to get close to this level. Like, I mean, we're talking like 4 years almost. So that to me, like, is a little bit more, if the VIX is this despondent, it just seemed like there should be a little bit more cause for celebration from certainly, right, the semis as the leader, but they didn't really perform to, I guess, to my expectations. Not that that means anything, right? My expectations are not really something they're worried about, but it just seemed like it was something that maybe you do a little better than that. But again, they did close out on the high, so I don't want to get too nitpicky. So yeah, I still think overall it was good, but maybe what they need is for this, and I covered this in macro measure too, so you're watching the same thing twice, but I apologize, but I just think it's important overall um, to the sector discussion and also the macro discussion. But look, this is sort of poised holding, maybe a little bit of a cat and mouse type of thing happening here. They're not going to let this thing maybe go too early. I don't know. Maybe there's a problem brewing there, something I doubt pretty strongly, actually, but I doubt that strongly. But look, it could be. But I just feel like maybe they're just not releasing this quite yet. So I'm thinking, this is probably the sign you got to look for, and that'll maybe give the semis the nod. And if the semis get going, then most will be right with the world in terms of stock market bulls perspective, because we have this right here. No, that's not popping up. Why is that not popping up? Let me try another one. Let's try to do this right here. There it is. Okay, so there's our grid of 12 that we often start with. And really, right, it's been more or less risk back on. If you look over here, these materials are just a little ways off. You've got XLI just a little ways off the high. XLU, again, potentially due to I'm just speculating, right? The electricity demand, there's suddenly this great bullish opportunity there. We actually did put in a very rare counter to a very strong trend idea on Friday, as cocktail hour was unfolding, because the RSI reading in here got up there. I think you got over 80, and that's at the high. And so that's not something you see that often from an XLU. So there might be a little bit of a pullback there. We'll see. But I thought it was worth it, given that that's relatively rare, that you probably do get a little bit of a pullback. We'll see what happens. But overall, if I just enlarge these all a little bit, it's not like everything went gangbusters, but a lot of things did well, right? You can see the financials reasserted themselves. Certainly the staples, XLP, they even got themselves into overbought status. That's how well they did for the week. So they started coming back after that. They came back after healthcare. They came back after real estate. Everything really started to come back. We have this XLE up here. We should probably drop a line on this little chart. As I say, we should probably drop a line on that little chart. There it is. But you can see where the resistance is for all those people that hate lines. But I think it's there. So that high is the release point in my mind at this point. And then if they can get through there, that'll open up more for them. But that still looks pretty nice overall. And if you look at the big pop, the pullback of 38.2, it's the duration of the pullback, how long it's lasted for, how long it will take probably to get back up there. That's a pretty healthy correction, which is really what I've been seeing, I think, the last couple of weeks, is that, yeah, we have to start thinking more bullishly after what Powell did. And but when we marry that up with the technicals, they look like corrective phases, I think, within a bullish environment. And so more so than something that will fail. Having said that, watch what happens to news on Monday morning or something like that. But that's really what it looks like to me. I still have a little tiny tingle from the Spidey sense, not anything big yet, but I still feel like there's something that's not quite right lurking out there. And I just don't know what it is. I cannot put my finger on it. There's a lot of things I could say, well, maybe it's this, maybe it's that, but I can't say, well, that's what's really got me just a tiny bit spooked. But overall, you're really, if you're a bear, right, I think you're really struggling at this point to say, oh, well, this is this or this is that. Most of these things are acting fairly well, and most of them are, we already know, to the exceptions, most of them have backed off enough and are on the way back up, and they're not yet at overbought levels. So that means there's room, even within the overbought, oversold mindset or construct. You still have room virtually everywhere, including, right, XLK, which is related to what we just covered in SMH. So that was a leader. XLC was a leader. Those sort of seeded their leadership maybe a month and a half to 2 months ago, but they're kind of coming back now. And they're both really not all that far away from the way that they can move sometimes. They're not that far away from all-time highs, just like the major index ETFs are not. as we covered in macro measure. So I don't really get a lot out of I don't get a lot of conflicting uh, information from these charts, and where I can say, well, there's problems here, there's problems there. If I want to find something that has an issue, probably the lag in XTN is still my issue. The XLP powering up so much more than XLY, that is sort of an issue. But that to me is, you haven't really seen this whole phase play out yet. If this is where things end up and then everything starts going into retreat, then we can say, like, look, these never participated, so there's something to this concern, but they still may, right? There's still time for them to do that. It's not like they're in failure mode, right? Or they're on the verge of failure. They could quickly be on that, of course, but as of right now, they're really not, I don't think, at that failure point. So that's what I would say. Like, if they look vulnerable, I'd be maybe trying to sing a little bit of a different tune, but they don't. What does have me concerned is stuff like this, though, right? Because we've been uncovering information that there's just been a lot of buying by very important parties in the metals, in the precious metals. And so, mainly, of course, gold. And note, right, that we talked about this. I'll go through it one more time, but we talked about a cup and handle many times in here over the years. But the most recent sort of table pounding that went on about it really was back in the fall, where we talked about it somewhere near the October to November timeframe, like coming into November. I can't remember exactly when, but I started talking about it, and just that, right, this has been performing, and it was kind of like we were ignoring it, and then we started taking it seriously because the technicals started to turn and the paper started to show up. And so the UOA has had some trades. We have a couple right now. SLV, I think we might have one in. I think I put a couple more in there. As we had, I think PASS a while ago. I don't, Newmont at one point. GOLD we had. Now we have SVM. I think we might have had Hecla. I don't think we had core, but we did have maybe a Hecla idea. Anyway, HL. But let's go back to what might be the more important factor here, which would be, if we could look at maybe just the GLD will give us enough data. Just keep it simple. I mean, I think that's been around for a while. I always have a recollection issue with what's going to give us that long-term data here for some reason. Maximum. Yeah, and this will do it, right? I mean, you can certainly make that out. And I wish I could just get a little more fine tuning on that. I'll do this instead of it. Now, there's this pattern that we've been talking about, for a long time, not just in the fall of 23, but at times we've talked about it when it seemed like they were maybe like back in here where they're maybe ready to do something, that ends in disappointment. But look, it's going, and we had a projection on it, and it made it to the 1.61, 161.8, and now the next one from there is 249.77. That's quite a leap, right? So this is actually firing out of the cup and handle resistance level through it and going, and so it's still in that breakout mode. It is a notoriously difficult space to trade in at times, but it can also get wild to the upside. It's almost like the upside calls trade similarly at times to the way the downside puts trade in stocks when there's concern. But silver lagging like it often does, but it says something similar. So if this fires, I think that's the big deal, right? It's not only a good trading opportunity, but that, to me, you have to have a little bit of concern as to why gold. You could say, well, it's all about inflation. Well, where's the big mystery? Well, I get that. It's just that the players that are buying it and the size they're buying in is not something you typically see. You don't typically see these players buying it, the VIPs, the way they are, the size they're buying it in. It's got that scary pattern. If you look at it, what that could portend, socio Economically, politically, whatever the case may be, risk wise, why would this sector that's really a sort of looked at as a hedge against inflation, a store of value, a place to be when it hits the fan, why would that look potentially so bullish? It has so much bullish potential. That's concerning to me. I told everyone I bought a lot of this, not as much as I should have, not as much as I wanted to, but I bought a lot of stuff as a hedge a few years ago, and I'm just leaving it there. It's literally is a hedge. It's not like I'm trying to make a boatload of money off of it, where I'm just going to flip it. I just thought it was a prudent move given my perceptions of risk and what I thought could be happening with respect to inflation and central banks and so on, and governments and so on and so forth. So anyway, that's could be a little concerning. Maybe that's part of the spidey sense that I'm talking about, but um, it's just been, I don't think we'll get this far back, but maybe I'm wrong. Let's see what comes up. Yeah, I guess we did get that far back. Oh, that's good. I didn't know if I'd get the gold future, but you can see the futures, continuous futures, they look, well, I just ruined it, but they did look the same, very similar, right? So it's all there, it's all there as you would expect. And it's been going on for a long time. And if this does start to really adjust to inflation itself fully, certainly, right, you all know there's been, since it really was back at its former high here in 11, you were there, right, in 20, what is that day right there? What did we come up to? 22. So we all know what's been happening since here in terms of the COVID response, and you're really just barely launching, and you know how much inflation there's been. So if they really do price this for where it should be with respect to real inflation, it probably has a lot more potential. The charts say it has a lot more potential. It's kind of scary. That's my point. So again, I wouldn't sleep on any risk you've got. You just need to stay with a DDA, discipline dictates action, and roll with whatever you're doing trading wise, right? Because we're in a phase that seems like it has a lot of potential for equities, but that it also has a lot of risks that are being addressed in interesting ways, concerning ways that are beneath the surface. So you don't always see this. Remember, think about, the fact that we had a really bullish run in the market from overall, like from the lows of 2009. You then had this really bullish run that lasted for quite a while overall, and right into COVID. And look how dormant, right, things were. Now you're breaking out. So it's a little different here, to say the least. And again, I'm not an expert in this space. I used to trade it pretty actively as a market maker for a while, and was on top of things more, but it takes a lot of time to get on top of everything in there. But it's worth it if you really want to focus on it. What else can I help out with? We covered the metals. Yeah, we were taking a look at, we took a look at, I think that you're really close in XLE, right? You're not, you haven't broken out, but you're really close. And you just need to see some positive momentum develop. Come on. I'm getting slow here, so we might have to start wrapping this up before Think or Swim and Zoom combine to torpedo me, unfortunately. But here's your daily. Again, I'd put a resistance line here instead of talking about it. Let's just do that. And I think if we do this, wow, the delay is getting there for some reason. I think you need to get up towards there. So basically the 50 at this point, and we switched over to percentages. Boy, the gremlins are really coming after me now here. But yeah, you've got that. That could also, to some eyes, not necessarily everyone's eyes, that could also have resemblances to a cup and handle. This is probably a little bit too much of a dip for people to buy into a handle here, though, a lot of people. But just letting you know, that kind of has that. That would be really sort of an issue. I'm trying to think of what else I might be able to bring up that would help out a little bit. Oh yeah, well, the real estate risk That is something to me that's potentially real. I think there's really big problems developing from what I was able to see and through Ryan's links and stuff like that in Canada. There's problems developing there. There's problems developing here. But as of right now, right, this is blissfully just kind of wafting back up in XHB land. So I don't see anything horribly wrong. I would need to see this crack below the 50, before I'd start getting concerned about it in a way, in a bigger way. I'm not that concerned about it. So I was trying to see if we could I wanted to get see if we could get anything else, but we'll have to go with the copper futures. And these were doing really well. They did have a little bit of a pullback on Friday. You can see that, but this again, right? I don't want to write this off, right? I know we're not trading copper, but copper's really been breaking out, right? We talked about that. We were kind of like, wow, copper's starting to go a little while ago, and it really has, though, right? It really has. So, got to give it its due, and that's usually a pretty good sign as well. So, if there's more energy demand, and as much as that might hurt consumers to a degree, that's a good sign. If there's more demand for financing and stuff like that for XLF, that might be a good sign. If there's more demand for copper, right, that's a good sign. All these things are potentially good signs, and you can see that they're very close to the highest high we've seen in a while there in XLF. The XLB, right, these basics are probably underpriced due to inflation, right? So there's a potential in there, and those are starting to re-energize and go too. Probably a little bit ahead of themselves, maybe a little bit right now, not terribly overbought, but if they do take a shot at the highs, they will be probably overbought if they do it soon. So I would say that the first chance of breaking out is probably not likely to go well if they start trying to do that immediately, unless, of course, there's news that plunges yields and maybe plunges the dollar and the rest of it. But if this to me, right, this is a good sign that basic materials are moving back up. Again, I've been kind of like wondering for a while, like, how are these industrials really able to do this with the way the world is and the way that rates have been? And these are potentially some things that happen in here are big ticket purchases, right? Who's ready to do that at a high rate, blah, blah, blah. But they've really hung in there. They actually got really within a whisker of the highest high, right? Just a few cents away already. So things like that are really acting well. Financials, as we talked about, are acting well. All the signs are there except for probably, right, the two things that remain the holdouts, and hate to be redundant, but it is what it is. XTN just not really confirming that, hey, it's all well. Everything's all well. Don't worry. We're right back near the highs, and we're going to go too. That would be an encouraging sign if they join the party. And I know this is sector situation, but if those small caps, just to kind of bring it all together, if those small caps join the party too, that would also be a very good sign. But I think you've got a lot of good signs here. Overall, I do think that you're at a VIX level that you may want to consider talking to Ryan, Greg, even Bill, if you're in classes with Bill, your coaches like Scott and Stu, things like that about what should I do? How should I position myself with some cheap vol if you think it's a buy? I mean, but it's getting down there. You're very close, put it that way. You're very close to multi-year lows in this thing. So if you do still perceive risk, that's significant risk that would be that you do still have a shot to maybe position yourself in some places with some really low vol. But overall, as we saw kind of on the grid of 12, there's nothing particularly bad that's happening right now. You just have a lagging situation. Your main things to me are lagging situation. You could say, well, if you want to nitpick, you could say maybe I think a lot more of this XLU is really about defensive positioning, as is XLP. I think there's probably some truth to that. There's probably some of that, but I don't think that explains this whole move. because this kind of thing normally would happen with everything else being in bigger technical trouble or jeopardy. And I don't see that at the moment. Doesn't mean it doesn't materialize, just I don't see that jeopardy staring me in the face right now. I see things that have see it as more lag at the moment. Like this to me is potentially lagging. XLE is a little lagging right now relative to a lot of these other sectors. But if you start getting those participating, and especially if you see the IWM doing the same, I think there's a great trading opportunity in IWM for longer term players, not short. Well, short term, sure, it's almost always there because it's a nice mover. But if you factor in getting back to the all-time high near 244, and then you factor in inflation adjusting that, even by the government's bogus numbers, you are way higher than you are now. So probably would be suitable to look at a longer term chart and say, okay, where do the charts suggest that we could go to? And clearly, right, this is your all-time high. And to me, right, the way that this has lagged and things have ran, I think you've got a lot more potential up here, a lot more potential. Now, that would probably mean that somehow, through all the various sleights of hand, hocus pocus, arm twisting, smoke-filled back rooms, negotiating all the madness that's become the modern American way. Somehow you pull through all that relatively unscathed. I don't mean to diminish what other people are going through, but it's just been rough on some people, but it hasn't really spilled over in the biggest way to a lot of people, which is usually the case when you have a really serious uh, economic phase that you're in. And I do think this one's been fairly serious, but it's been papered over quite well by the media, which does a good job of that quite often. Might be the only thing they do well. But anyway, this to me, right, could trade up to, and I'm back on percentages, but this to me, just thinking about it, I think it could trade up to 268. And that's not even a technical objective, right? Or projection number. I think about here is probably well understating it, but that's still a really nice, as you can see, that's still a really nice trading opportunity. That would be, of course, if we really are in a new bull and it's real, right? That would be a new bull that's real. So I would keep your eye on that, even though this is sector situation. I think it's worth noting, and keep your eye on how these things behave, because we don't know what we're about to be treated to. We never do, and you just don't know if you're going to get false breakouts. You could get lower highs. You could get similar highs, which could create double tops in a lot of these things. You could have even lower highs in some of them, double tops in others, and so on and so forth. So just keep an eye on how these things behave, but they're really not far from, in most sectors, from being right back near the all-time highs. And as inflation continues to plague things, even just a few months ago, right, a new all-time high 3 or 4 months ago probably would warrant a little bit past there in terms of inflation, just to adjust for it. So you probably could see breakouts potentially, right? Just remember, when you start seeing that happen, should it happen, keep your eye on the RSI to make sure that it's not too far overbought, because it's a lot likely to, in my opinion, it's a lot more likely to be successful as a legit breakout if you're able to do it from a nearby level and a relatively subdued RSI than you are from a stretched RSI after a long run. Excuse me. That's just my way of looking at it. But excuse me, I hope this helped you out. Hope you get something out of it that helps you this week or some week in the future. I want to thank everyone for tuning in. I wish everyone a great conclusion to their weekend, a great trading week ahead, and I'll see you through all the various channels that I operate in. Thanks again for tuning in.